Everyone, I'm MJ and this is MJ's Place. Welcome back to my channel. Today we are going to discuss credits. As you can see here on my lovely slide I prepared for you all. Before we get started into the content, please like, subscribe, and share. Remember, friends care and they share. So please like, subscribe, and share my channel. It really helps me and it'll help the ones that you love too as we all journey towards financial literacy and freedom together. So again, we're going to discuss credit. So we're going to get started. I am hoping this does not block out the words. I try to make myself a little smaller. So we're going to see. I promise my dog has been laying here completely silent the whole time I've been editing this other video. It's a spirit. All right, so it's Credit 101, and I am so happy. This topic is so near and dear to my heart because this is actually how I got started on really understanding the importance of financial literacy and freedom. At the end of the day, other people's money is a key tool to building wealth. There's no question about it. So, we're going to do a really high level overview of what that entails and how we are going to implement that in our lives. So first we're going to talk about what is credit. An overview of credit. Credit is the ability to borrow money or access goods or services with the understanding that you'll pay it later. Lenders, merchants, and service providers, known collectively as creditors, grant credit based on their confidence you can be trusted to pay back what you borrowed along with any finance charges that may apply. Why is credit important? Why do you need credit? Well, we need credit because good credit is necessary if you plan to borrow money for major purchases such as a car or a home, or maybe you want to take advantage of the convenience of purchase protection that a credit card can provide. So instead of carrying cash around if you lose your card, you have that. Also, if your refrigerator or anything like that breaks, you have credits, just run out and get it. You don't have to have $2,000 in the bank. A higher credit score can mean better interest rates and terms on loans and credit cards. Many card issuers also reserve their most enticing rewards for customers with great credit. So your flyer miles, cashback, city cash, all those different things, you will be rewarded for paying people on time and not carrying high balances as well. Why is credit important? Continued. Lenders aren't the only ones who concern themselves with your credit reports and credit scores. It looks like landlords may check your credit when deciding if they'll rent you an apartment, determining how long or whether or not they'll rent you an apartment or determining how large of a security deposit you'll have to pay. Insurance companies may use your credit scores as factors in determining your rates. Utility companies may check your credit before deciding to let you open an account. Yes, whether you get gas turned on or electricity turned on or cable can be completely predicated upon your credit. Prospective employers may use information found in your credit reports to make a hiring decision. Your credit report can be used as well to verify your identity. They check for things like matching addresses and employment history, income verification, and for other purposes defined by federal law. Background checks, a lot of times they'll do your credit. Credit is a tool that can help you buy things you need now and pay for them over time. Establishing and building up good credit over time is an important element of sound financial health. How does credit work? Your credit history is summarized in files known as credit reports, excuse me. And they're compiled by three different independent credit bureaus: Experian, TransUnion, and Equifax. Banks, credit unions, and card issuers and other creditors voluntarily report your borrowing and repayment information. Something to keep in mind too, even if you're doing like a no credit check, buy here, pay here kind of thing. Um, so Number one, you don't want to use those places because they usually charge you an astronomical amount of interest. Okay, that's the penalty you pay for not letting them run the credit. Okay, in addition to that, they don't report a lot of times to the credit bureau when you're making payments. So like you can be paying on your furniture every month on time, every few weeks on time, and they're not reporting that progress. But what they will report is if you are delinquent. So be careful about the kinds of financing that you do. You want to make sure that it's a benefactor to your credit, not just if they're upset that you didn't pay them, that that's the only time your credit report hears from them, okay? Information on your credit report includes the number of credit card accounts you have, their borrowing limits, and their current outstanding balances, the amounts of any loans you've taken out, and how much you've paid back, whether your monthly payments for your accounts were made on time, late, or missed altogether. Notice how they keep saying pay back, pay back, pay back, right? More severe financial setbacks such as mortgage foreclosures, car repossessions, and bankruptcies. Oh my goodness. Listen, mortgage foreclosures, the reason why they're so bad, and it's never to judge, quote unquote, anyone. Let me tell you, it's not about judging you. You have to understand you're not helpless. You owing people money is only really a detriment to you, and they can make things a lot worse for you than what you're in right now. So access the tools. If you're in mortgage trouble, go to the CFPB's website. Look for those anti-foreclosure measures that they have. Talk to your creditor. Don't allow that to happen, love bugs. Same thing with car repossessions. To be honest, a lot of times if you're honest with them and you work with them and you don't default on your arrangements, you should be able to continue to have your credit extended with them. Bankruptcies. Keep in mind that there's Chapter 7 and Chapter 13. Chapter 13 has a waiters plan, gives you a 5-year repayment. If you don't follow through, it will be dismissed instead of discharged, which is what happens at the end of those two different kinds of bankruptcies once you satisfy those terms. Chapter 7 usually requires you have to liquidate assets. What if you don't have any assets? Do you see the pain that not paying people, can cause you and your family? So, and then when you get ready to buy a home, there's a waiting period that you have in place when you have gotten a foreclosure or a repossession of things of that nature. Because basically it's like, dang, like you got so behind on it, you didn't work with them and they had to come and get their collateral. So that's why we're working together to make sure you know as much as you can. The best borrowers are the educated borrowers. How credit works continue. To narrow their lending decisions, creditors often use a 3-digit number known as a credit score as the first step in deciding whether or not to issue credits. This ranges between 300 and 850. Your credit score distills the information on your credit reports. So it's a boiled down, a summation, a high concentration of information into something that's easy to interpret and does so in a fair way that minimizes the possibility of bias. Sophisticated systems known as credit scoring models calculate your credit score by performing complex statistical analyses on the content of your credit file. Different models such as your FICO score, which is a tri-merge, your Vantage score, which is similar to what you'll find on Experian or Credit Karma. They calculate scores differently, but all assign higher scores to individuals whose credit histories make them statistically more creditworthy than those with lower scores. So meaning your FICO score might be a 737, your Vantage score might be a 787 or 767 or something like that. But basically the gist of all of them is the higher the score, the better, the better the content, right? Again, that combination of paying people on time, not missing payments, not being high on your balances, not having collateral repossessed, all super important. In conclusion, credit is crucial in all aspects of life. If you have a pet emergency, credit can help you get what you need to save your furry friend's life. If you have good credit, it can get you credit you need to save your life, like care credit. It makes what you do less expensive and can make what you earn go even further. Your interest rates, your loan terms, they're negotiated upon your credit worthiness. more trustworthy you are, the better you are, the better they can offer you money saving rates. Having good credit is a solid start when creating a wealth strategy that will be a complete success. And the question of the week is, how old were you when you found out about credit? I was a teenager. I was maybe about 16, 17 years old. Found out about it in high school in a accounting class that I didn't really take that seriously. And I would say when I really came to terms with what credit was and began to really utilize it was many years later when I was in my early 30s. And that was just doing something as simple as Credit Karma, Experian, things of that nature, where I was able to monitor my credit, dispute things that needed to be disputed. And we're going to work on these things together in further videos. I'm going to show you how to dispute things. I'm going to show you trade lines, how to read your credit report. We're going to go over all of that. But just to get our toes wet, let's talk about it. When did you first hear about credit? All right. It was so nice recording this video. It was a lot of fun. I'm really hoping I did not take up too much room in the corner. I tried to make myself a little bit smaller for this particular recording. But in any case, I love you all to the bank and back as usual. I'm going to talk you out as I figure my way out. I like to click around. But again, I'll see you all next week. Until then, have a blessed and fantastic week and happy Sunday. Bye.